The cryptocurrency market has many experts who set up bets, but rarely mention when to take profits and withdraw from the game. However, realizing profits is the ultimate goal, deciding the entire investment result. Next, let's learn with Block 24 the secrets to effectively taking profits in a volatile and difficult market like crypto. The importance of taking profits, the classic mistake of new crypto investors is to focus on finding entries without a specific plan to sell. Indeed, in the 2020 to 2021 bull run, most investors did not have time to close profits despite previously owning huge profits. So, some points to remember when investing in crypto are: no one goes bankrupt because of profit taking. Taking profit helps protect results and keep a stable mentality to continue participating in the next cycle. The market can reverse at any time. Always have a specific plan to enter and exit appropriately. Avoid being swept away by the crowd's emotions. How to identify market tops crypto cycle and lessons from the past. 2016 to 2017 cycle saw Bitcoin rise from around $1,000 to the $20,000 region in late 2017, followed by the 2018 crash when Bitcoin fell to $3,000, a loss of about 84% of its peak value. Similarly, in the 2020 to 2021 season, Bitcoin broke out from around $4,000 in early 2022, a peak of around $69,000 in November 2021, then fell back to $15,500 by the end of 2022, a drop of about 77% from the peak. The lesson is that crypto cycles are repetitive. After each boom comes a disillusionment. The 2017 uptrend ended. Many investors were left empty-handed due to FOMO during the ICO craze. By 2021, many new trends such as DeFi, NFT, and Metaverse appeared and shone, then quickly faded, leaving heavy losses for those who could not withdraw from pie-in-the-sky projects in time. Therefore, understanding the cyclical nature will help investors take profits when the market is at its peak. Instead of believing that this time will be different, understanding market structure to know exactly when to take profit, you need to answer, what phase are we in? Crypto moves in cycles, consisting of three main phases. Uptrend, price increase strongly. Optimistic sentiment, downtrend, price decrease. Negative sentiment, accumulate, price sideways, little fluctuation. In crypto, big cycles are often associated with Bitcoin having an event that reduces block rewards by half, which occurs approximately every 4 years. Historically, uptrends typically begin a few months after the halving, of course. Cycles are not always absolutely accurate, but this is a useful frame of reference to help you position yourself in the right direction. As for cycle peaks, here are some identifying characteristics based on my personal experience. Characteristics of cycle peaks. The hype is widespread. Everyone is talking about crypto. From newspapers to coffee shops to social networks, Google Trends. Peaks. Keywords Bitcoin, crypto are most searched right when market peaks. In 2017 or 2021, extremely high fear and greed index, usually maintained at more than 81/100ths, showing extreme greed. Parabolic price rise. Many weak altcoins also increase. Dozens of times irrational predictions appear. For example, Bitcoin will reach $1 million. Altcoin XYZ 1,000 times FOMO to the max. Newbies pour money in massively, even borrow margin. Mortgage assets to go all in effective profit-taking strategy forecasting. Tools. Some useful forecasting tools that help crypto investors make accurate profit are technical analysis, RSI, MACD, Bollinger Bands indicators on large time frames weekly, or monthly help identify when coin prices enter overbought territory. For example, RSI on Bitcoin's weekly time frame reached over 90 in late 2017 and late 2021, indicating that the market was overheated, and of course, the price corrected strongly. You should also monitor important support resistance levels. When the price approaches strong resistance, such as the historical peak ATH, the probability of reversal increases. This is the time to consider gradually taking profits. Fundamental analysis. Systemic macro events such as interest rate policies, laws, etc., all have a strong impact on the crypto cycle. In addition, it is also necessary to pay attention to specific news in crypto and accurately assess the level of impact on the general market. If, for example, in the 2022 bear season, we have FTX going bankrupt, Luna approaching zero in-chain data. What's unique about crypto is that we can analyze blockchain data to understand investor behavior. On-chain tools from Glassnode, CryptoQuant, Arkham, etc. provide many useful insights. For example, a sharp drop in the amount of Bitcoin on exchanges could signal that the majority is holding on to wait for higher.
This is building a profit-taking
system. To build an effective profit-taking system, you need to pay attention to the following points. Set a clear profit target before placing an order. You need to specifically determine the expected price or desired ROI as a basis for taking. Take profits in parts instead of all at once. Splitting up your selling points helps realize profits early. Reduces risk if the market reverses and avoids the pressure of finding the right top sell in increasing proportions as the price goes up. You can sell 30% when you reach a 10% profit. Sell another 30% when you reach a 20% profit, and keep the rest to take advantage of the trend, helping to optimize profits while still being safe. Adjust stop loss when in profit. Move stop loss to the same level as the entry point or higher when the price increases, ensuring that if the price reverses, you can still exit the order without losing money. Or to be more flexible, you can also place a trailing stop order, automate orders to eliminate emotions. Use tools like limit orders or OCO1 cancels other to pre-plan take profit and stop loss scenarios. Avoiding being swayed by market volatility discipline. To stick to a set plan, no matter how the market or crowd psychology fluctuates, do not change your goals without a clear reason when to sell 100% of portfolio. The answer depends on each person's goals and risk appetite. But there are some cases where you should consider taking profits on your entire portfolio when your financial goals have been met or exceeded. If your crypto investments have grown to a life-changing level, such as buying a house, paying off debt, or reaching your initial target, then selling most or all of it is completely reasonable when systemic risks arise. Looking back at the past, we have unexpected negative news such as the spread of COVID, trade wars, the Fed starting to raise interest rates, conflicts in countries. These are macro information that affect the entire financial market, including crypto. When there is no more trust, sometimes the decision to sell 100% does not come from the overall picture, but from the individual risks of a project. If the coin token you are holding suddenly has a big problem, such as hacking, the team fleeing, being sued by the SEC, consider selling everything to preserve capital. Important notes when taking profit: emotional management. Emotions are the number one enemy of investing. Greed makes us reluctant to sell when we have profits, always expecting prices to rise forever. Fear urges us to buy at the top, and also makes us hesitate to take profits. To overcome this, you need to maintain discipline and control your emotions by sticking to your plan, limiting the number of charts you watch, reading less FOMO news, or watching other people show off their profits. Be satisfied because you have followed your original plan. Capital protection is the top priority in investing. Capital preservation is more important than making a profit. Cannot close a profit if you have no more capital to invest. Therefore, every trading strategy must put capital safety first. In particular, always assume the worst possible situation and prepare a plan. An important principle is not to let profits turn into losses. As I said in the previous section, move the stop loss to the break-even point or close apart when there is a certain profit plan to return to the market after taking profit. You need to plan to reinvest soon instead of being negligent or rushing back. A common mistake is to stay out too long and miss the opportunity, or FOMO back too early and buy at the short-term peak. Therefore, it is necessary to clearly identify the specific time and conditions to reinvest strategically. Most basically, you should watch for signs of a cycle bottom to make a decision. Market bottoms are often the opposite of peaks. Extreme pessimism, constant bad news, no one wants to talk about crypto, the Fed maintains high interest rates, etc. When you see the media full of statements that Bitcoin is dead, it can be a great opportunity to reaccumulate smart. TPSL order placement tips: avoid placing orders at round prices and close to the threshold. Round prices and close to resistance prices such as Bitcoin's $70,000, $100,000 are often overloaded due to many short orders leading to no matching. You should place a little difference like $69,800 or $99,500 for better. Matching always sets stop-loss SL with each order, even though the market is uptrending. It can still suddenly reverse. SL helps limit losses in bad situations, just trailing. Stop, according to asset volatility. Large coins like BTC or ETH can use trailing 15 to 20%. Small-cap altcoins with strong volatility should be trailed wider, around 25 to 30%. Personal opinion on crypto 2025, although the market is cyclical. Each season develops in a different form. Personally, I think that in the period of 2024 to 2025, as crypto is gradually becoming a mainstream asset, especially with the emergence of Bitcoin ETFs and institutional capital flows, BlackRock. Fidelity, the large number of altcoins diluting. Capital, the possibility of a crazy surge like in 2017 or 2021, will no longer exist. Instead, the price of top coins may stabilize.